Let's talk a little bit about Intel. Intel will either be my worst investment decision ever or probably the best one. But for it to become the best one, I of course had to see this happen. Yes, Intel down 60% year to date. Never would I have imagined that in 2024 someone would have told me, in 2024 Intel stock would be down 60%. I would have called that person a crazy person. And I think most of us could agree. Now, yes, I know a lot of people are saying, oh, Intel had it coming, Intel had it coming. Okay, fine. It's true that the previous management before Pat came in didn't really focus on the next generation technologies. They focused more on buybacks and dividends. That's basically what they did. They didn't even look at AMD that was coming at them quite fast and completely forgot about NVIDIA, GPUs, data centers, AI. Never even thought about that, right? And so you see the last 5 years, Intel stock down 57%. In the last 10 years, down 25%. Imagine you were like a smart guy 10 years ago, September 2014. You're buying Intel because, well, why wouldn't you, right? Why wouldn't you buy Intel back in 2014? Guess what? 10 years later, you're down 25% on your investment. Intel is now a company worth $84 billion. Now, despite it being down 60%, it has a forward PE of 55.5 times. How can that happen, right? How is that even possible? A couple of months ago, the PE was close to 20, even below 20. So how did that happen? Well, this is basically the worst combination. Stock price goes down, but the profitability of the company goes out the window. And so you are seeing these analyst estimates right here. Sales is expected to be down 3.4% year over year in fiscal 2024, but EPS is expected to be down 75% year over year. Of course, the assumptions are that in the next 2 fiscal years, both top and bottom lines are going to grow back. And of course, EPS is expected to bounce back quite faster. Now, if you've been following the channel for a while, you know that I went into Intel basically believing in the comeback story. I knew this was going to take some time. I mean, they are still going to deliver 5 nodes 4 years. That's still quite an achievement. But it's the data center, it's the foundry side of the business that is probably a little bit more challenging. And it's the part of the business where you are investing first billions and billions of dollars, and you expect that you're going to generate billions of dollars in profits in the future. Now that future is nearing, and we are yet to see major improvements. But the worst thing is that we saw some improvements in Intel for a couple of quarters. I'm going to show you a couple of slides in just a second. You can actually see this in the forward PE, right? The forward PE here, February 2023, was also 50.7 times. Then there were a couple of quarters where things were going to the right direction, and so we saw the forward PE drop to close to 20 times. And things were going into the right direction until they did not anymore. And that's the problem. I have no issues when you're telling me, look, new CEO, new management team, new vision, new goal, etc., etc. This is the timeline. Fine. Okay. But then when every 2-3 quarters or so during the earnings call, we have to hear about, oh, actually, there's going to be a restructuring, and then there's going to be another restructuring, and then actually, oh, that restructuring did not go to plan, and so we had to change it again and again and again. That's when things become a little bit unacceptable, let's say. Now, of course, I know to turn this huge Chipzilla around, it takes time, it takes effort, it takes money, production, engineering, you name it. But at least be better at communications. Maybe that's the thing. I'm not even going to touch again on the CEO bonuses and salaries of executives that get millions and millions of dollars each and every year, and then they say, oh, the Intel family this, Intel family that, but we have to lay off 50,000 of you. I'm not going to touch on that again. I did so in the last video. So in this one, I want to touch on what could go right with Intel, what's been going on in the last couple of weeks, because I've seen some rumors of Intel and Qualcomm and stuff like that. No. Plus, I want to touch on the recent conference, I think, with Citi and the Intel CFO. Mentioned a couple of things that I think is quite interesting. And then in the next part, because otherwise this will be way too long, in the next part I want to touch on why I'm still very, very bullish on Intel in the future. While I said in the last video that I will not be putting a cent anymore in Intel until I see some major improvements in the coming quarters, why I might be changing my mind, and that's because of Lunar Lake. But more on that in another video. Anyways, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Alright, so let's first start with a couple of comments that were made by the CFO in that conference. So I touch on a couple of things here. So first up, cost reduction plan. Intel is implementing a significant cost reduction plan to improve profitability. Cuts are being made across various areas, including operating expenses, cost of sales, and CapEx. The goal is to reduce OPEX to $17.5 billion by next year and further in subsequent years. A major focus is on streamlining operations and reducing redundant processes. To be honest, I really wish Pat would pick up the phone and call Palantir because I think they could help them out. CHIPS Act. Intel is awaiting grant money from the CHIPS Act, which is expected to arrive later this year, so they have yet to receive anything. The company is also benefiting from the investment tax credit. And the last one here, the restructuring plan is not expected to impact the CHIPS Act benefits. As for the foundry business, Intel is making progress in separating its foundry and product businesses, not separating like spin-offs to different companies, or at least that's not what's going to happen as of yet. And to be honest, I hope it never happens. I hope it stays under Intel and it operates a bit like I said previously, like SoFi and Galileo. Galileo has its own CEO, SoFi has its own CEO, but Galileo is owned by SoFi. Anyways, continuing here, the company aims to drive maximum shareholder value through this separation. Basically, both parts will have their own P&L, so obviously each team will make sure that their side looks the best. Previously, that was not the case, and so yeah, you couldn't really see what was going. You could, but it was hard to see exactly what was hurting margins. Now you can see exactly what is costing them too much, why is it taking too much time, which part of the business, etc., etc. Third one here, Intel is gaining traction in the foundry market, particularly for packaging solutions. The company expects to see meaningful foundry revenue from external customers in 2026 and even more in 2027. Intel has accelerated its cost reduction efforts due to a revised outlook for the second half of the year. The company is facing challenges with gross margins, partially due to early manufacturing shifts and other factors. Intel is committed to improving operational efficiency and profitability. As for the CPU, so Intel is on track to achieve its goal of 5 nodes in 4 years for CPU manufacturing. The company has successfully launched several new CPU products, including Lunar Lake, Sierra Forest, and Granite Rapids. Intel believes it is a strong competitive position in the client CPU market. You will see in just a second. The company is working to improve its competitive position in the data center CPU market. As for the PC market, Intel views the overall PC market as fine, but expect moderate growth in the coming years. At the start of this year, they were feeling as if there is going to be a greater recovery in the second half. Didn't really happen. The company is cautious about its outlook for the PC market, considering factors like inventory levels and potential economic headwinds. Intel believes that innovations like AI PCs and operating system upgrades like Windows 12, for example, could drive PC refreshes and market growth. To be honest, I've talked about the AI PC stuff as well. I'm currently looking at maybe buying a new one with the new Intel Core Ultra. We'll see. But to be honest, let's be really honest here. This whole AI PC, AI phones. At the end of the day, what do we want? We want a better product that performs better at a good price. If they want to label it AI PC, whatever, so be it. I don't care. Is it better than the one I had before? Yes. Am I paying more or less for it? That's what I want to know, basically. You want to label it AI PC? Fine by me. But you better make it a very good product. Anyway, switching gear here, and this is with regards to the foundry business. So the positive side here, despite the negative things that we've heard about the German project, etc., the positive one is here, Poland's Intel plant gets EU green light for $1.9 billion in state support. The European Commission has given Poland a green light to support an Intel chip assembly and testing plant with more than 7.4 billion zlotys or $1.91 billion in state aid. The decision comes as Intel grapples with its cost-cutting drive that has raised questions whether it may delay or cancel some European expansion plans, which also include a major new chip manufacturing plant in Germany. A spokesperson for Intel said the company appreciated the Polish government's continued support and partnership. An Intel spokesman also said the closely linked German project declined to comment beyond repeating that the company wanted to serve European customers and execute their plans. That $33 billion project is still awaiting EU approval, and groundbreaking has been delayed until May 2025 at the earliest. So we'll see what happens. I still think it will go through. I think it will go through, especially after, well, last week's, let's say, big conversation around the EU growth and comparing it to the United States and what needs to be done in the EU regulation-wise, innovation-wise, tech, etc., etc. I think it would be a shame if these things do not go through. Now, another thing I saw, and I had to laugh when I saw this, exclusive, Qualcomm explores acquiring pieces of Intel chip design business. The mobile chip maker has examined acquiring different pieces of Intel, which is struggling to generate cash and looking to shed business units and sell off other assets. Intel's client PC design business is of specific interest to Qualcomm executive, one of the sources said, but they are looking at all of the company's design units. It will never happen. It will never happen. If you're telling me parts of Mobileye's business, fine. Parts of the embedded one, fine. But Intel's chip design business, yeah, you don't know what you're talking about. It's never going to happen, ever. So, yeah, there is that. Moving on. Now I'm here back with some comparisons here. So this is the distribution of Intel and AMD x86 computer CPU units worldwide. We can see that, yes, over the last couple of years, of course, AMD did gain some market share, and then it did also lose a little bit of market share starting here Q1, Q2 of 2021. And then more recently, it's basically been flat between Intel and AMD, which, let's be honest, pretty positive, all things considered, from what we've been, well, hearing about Intel, right? So that's a good point. Second one here is the distribution of Intel and AMD x86 laptop CPUs unit worldwide. Here the same thing. You've seen that jump for AMD, but since then it's been pretty flat overall. And imagine what will happen with Intel once they finally come out with actually good, superior even products, chips. I think we could see a little reversal here, but still even the Intel that is struggling right now, market share wise, doing quite well. Now, just an FYI, and this was of course Q4 2023, so yeah, we're more than half a year later here, but still, Intel is still huge when it comes to CPU, almost three times more than all the rest combined here. When we talk about PC shipment units, I mean, this is Intel, this is all the rest. So yeah, despite all the headlines, despite all the jokes that are being made about Intel, people still need to realize that, yes, Intel is too big to fail, in my opinion. So why did the stock crash so much? Well, the stock crashed because of this, because the Q3 outlook. I've never seen, well, maybe I've seen this also with Intel, probably a year and a half before this one or something like that. Revenue to come between $12.5 and $13.5 billion. That means it's going to be down $1.2 billion year over year. Gross margin, non-GAAP in here, disgusting, 38%, down 7.8 percentage points year over year. EPS, non-GAAP here as well, a loss of 3 cents, down 44 cents year over year. Absolutely horrible guide. I truly hope that they're not going to meet this, but beat it. Because if they cannot beat this, then yeah, then it's really not that great. And then of course guidance for Q4 has to be much, much better as well. And so right now, if we look at Intel, I mean, it's back to prices not seen since December of 2012. Yes, can you believe that? Me neither. Anyways, December 2012 is where this stock has bottomed out basically. So could the same happen right now here in 2024? Maybe RSI is still oversold on the weekly. I mean, I've seen many comments under my videos saying, oh, I'll be interested at $12, I'll be interested at 10, at 15. Sometimes you don't really have to be that greedy. And I think that right now it is priced for bankruptcy. So yeah, do with that information what you want. Overall, I'm still having my position in Intel. It's not a big one, thankfully, because otherwise I would be in the big reds in my portfolio. It's not a big one, it's not a small one either, but it's one where I still believe in the turnaround story. I still think we can go much, much higher. Do I think we'll go to $60, $70 anytime soon? No, forget about that. But back to $30 is definitely a possibility in 2025 if, of course, margins are becoming better, we see solid revenue growth, EPS growth, and yeah, some solid momentum with the foundry business. But once we get, let's say, towards the end of 2025 and there is all of that momentum, then of course the stock could go higher. But it's all about the fundamentals here. It's not about, oh, the stock is now down $20, so it has to go back to 30. No, it will only go back if the business actually signals to investors, to the market, look, we're back. We're really, really back. Not just from a technological standpoint, but from a financial one as well. So yeah, that's all I've got for you right now. There will be a second part. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.